Today on Business Incorporated, Zimbabwe reaches new vaccination milestone in Africa's vaccination drive. World Health Organization appoints former UK Prime Minister Gordon Brown ambassador for global health financing. And Russia resumes wheat exports to Algeria after 5-year break. Hello and welcome to the program. I'm Chimeze Obi Iwago. First, the markets. And bearish sentiment permeated major markets in Africa at intraday. We saw a marginal loss in Nigeria as the all-share index dipped 0.02%. South Africa's JSE index was the worst hit, down over 2%, followed by the EGX 30 in Egypt, being in the red, down 1.03%. In Kenya, the market is closed, but ended Friday's trading positive at 2.23%. It was also negative sentiment at intraday across board in the markets we track in the Middle East. Abu Dhabi index dipped 0.80%. Dubai index lost the most, over 1% down. In another region, Saudi Arabia's Tadawul and Qatari's index lost 0.76% and 0.41% each. And moving on to Europe now, stocks were lower in early trade as global markets contended with concerns over the U.S. Federal Reserve's tapering timetable and fears surrounding embattled developer China Evergrande Group. For more, Christy Platzen joins us now. Hey, Christy. Well, the German blue chip index, the DAX, has started trading today for the first time with 40 members instead of 30. How has the market reacted?
Yes, hi, Chimmy. Well, as you can see on the wall behind me, the reaction today has been a little pessimistic, we could say. But I think it's important to caution that this maybe has less to do with the new changes to this index, which is the largest one in Germany, and much more to do with both of the elements that you just mentioned, the Federal Reserve's announcement later this week in the U.S., and particularly, yes, a lot of kind of economic nervousness out of China. If we want to think about what might actually happen with this index going forward, we have to look back a couple weeks. When they announced these 10 new members, we saw a spike for the DAX. So that really reflects a lot of investor optimism about these changes, which along with adding 10 new companies, they also added profitability checks. So this is really meant to bring about stability and increase profitability for this index. So I think we will be seeing more optimism in the weeks ahead.
All right, let's look at what's happening in Asia. In Hong Kong, the stock market plummeted today due to concerns spilling over from China over the real estate firm Evergrande. How much of a concern is this in Europe?
Well, I think it's fair to say that investors certainly are keeping an eye on things. They are concerned. China is a huge market, and what's happening with Evergrande is certainly going to be an economic blow to some degree to that economy. It's still unclear exactly how much. This is a real estate giant that's struggling there, and everyone from individual homeowners in China to big banks and construction companies and other people on the supply chain are going to potentially be affected by how that plays out. China is a major player in emerging market indexes. A lot of European investors are involved in those as well. So it will all come down to how they manage this debt situation with this company. We don't want to be too pessimistic, but people certainly will be keeping an eye on that this week.
Absolutely. And back in Germany where you are, airline Lufthansa plans to offer discounted shares to raise about $2.5 billion to repay the state for coronavirus bailout funds. What more can you tell us about this?
Right. So basically, Lufthansa has announced that starting in early October, it will be offering steeply discounted shares. I believe it was around €3.58 a share, which is less than half of what the closing price was on Friday. So quite a discount for anyone who's interested in picking up some of those. And so why are they doing this? Last year when the pandemic struck, the German government provided basically a bailout to its national airline for 9 billion euros, basically trying to counter the effect of air travel coming to a near stop due to the pandemic. So as long as the Lufthansa has not paid that money back, they still have certain stipulations that they're required to follow, and those include things like a ban on dividends, a ban on bonuses for management, so that, of course there's incentive there for them to pay the money back. They thought they were going to pay it back by the end of this week. Air travel is still very, very low, lower than people had expected earlier this year. So they're hoping to bring in some of that money with this steep price cut. Air travel is still pretty uncertain how that's going to be going forward, but maybe this will be enough to earn some of that money back.
Yeah. All right, Evergrande continues to roll the markets. I guess we'll continue to keep an eye on that development in China as it affects all the markets. It's the beginning of a new week, so we'll see how that goes. Thank you, Christy. Enjoy the rest of the day.
Thank you. You too.
In the UK, sterling hit a 4-week low against the US dollar this morning as nervous investors scamper for safer assets. For intraday market update and other developments in the UK, let's hear from Juliana. Hello, Juliana. Good afternoon. Well, the UK's energy crisis features heavily on today's front pages. The government is holding emergency talks amid fears more small suppliers could soon collapse. And a sneak peek into what the conversation have been in this meeting. Is there a way forward?
Good afternoon, Chimaze. Not much detail about those crisis talks which are currently being held by the UK's Business Secretary Kwasi Kwarteng and industry leaders from energy firms. So far, there has been a tweet from the Business Secretary basically saying that the government's main priority is to protect consumers. And I think this is what the fear is for some of the smaller energy firms. It's protecting consumers that could potentially push them into collapse. At the start of this year, there were about 70 energy firms all competing for customers by offering an array of different prices. But according to some, that could go down to as little as 10 if they're not able to secure some sort of bailout by the British government. Just to kind of rehash what we've already said and what most people already know, gas prices are soaring here in the UK. That's because there are depleted amounts across Europe. It was a very bitter winter last year, and of course there has been growing demand from Asia and other places around the world as lockdowns begin to start lifting up. And now, because lots of small companies do not buy wholesale prices, they buy at smaller prices, it is starting to pinch them. So much so, I believe about 4 smaller firms have already collapsed. Lots of firms that rely on gas for fertilizer, they've already started closing production. And even though prices in the UK will be raised next month because the Ofgem regulator decided to raise the benchmark, some firms are saying it's not enough. And now I don't believe that the government are going to hike the benchmark by any more, because so many people in the UK are already struggling to pay the bills. This is a major cause for concern, especially because the big firms like E.ON and British Gas, they are not willing to take on some of the customers that some of these smaller firms are going to leave behind.
Let's see what's happening in the market and how much of this is feeding into the market. The pound lost 0.75% this morning. The FTSE 100 also tumbled. What has changed this intraday?
Not much has changed, Jimmy. In fact, the FTSE has actually gone deeper into the red at intraday. The all-share is down 1.52%. The FTSE 100 down by 1.61%. And the FTSE 250, the domestic market, that's down by 1.36%. In the currencies market, the British pound, as you were saying, down on the US dollar by 0.31%. Also down on the euro by 0.13% and down on the Japanese yen by 0.69%. Clearly, the UK gas crisis is weighing heavily on investors and, of course, taking lots of sentiment from the ailing Evergrande in China, which is seriously affecting the world's second largest economy.
And Andy Haldane, the former Bank of England chief economist, has been appointed as the head of the government's Levelling Up task force. What does this new task entail?
Well, it's a good question. A lot of people are not so sure, but some suggest it's to keep Andy Haldane's mouth closed so that he doesn't become a staunch critic of Prime Minister Boris Johnson's levelling up agenda, which is really his key domestic agenda, aside getting us out of the European Union. He did give a speech a couple of months ago, completely lost amongst post-pandemic recovery initiatives. And he has decided that he wants Andy Haldane, as you said, former chief economist of the Bank of England, pretty much known as somebody that champions regions that are underdeveloped. He has said on the record he grew up in Leeds, which is an area in the north of England that doesn't necessarily get financing that you would see in the City of London. So he's always been somebody that cares for those who are often left behind. So he's seen as somebody who could be pivotal in Downing Street, which is why he's got this permanent secretary role. There was a cabinet reshuffle last week. Michael Gove, who was pretty senior within the Brexit ministry, he's now been moved to tackling housing and development. So he will be working under Michael Gove, and he will be having a key eye on trying to map out this strategy and perhaps coin a new phrase, because a lot of people in this country are getting pretty sick of levelling up when they're not seeing any evidence of it.
Well, we'll see how this new appointment will keep his mouth shut. We'll keep watching to see. All right, thank you, Juliana.
Thank you.
And Hong Kong's Hang Seng Index led losses among Asia-Pacific markets today's trading, with shares of embattled Chinese developer China Evergrande Group continuing to drop. The Hang Seng Index dropped 3.51%. The Hang Seng Properties Index dropped to a 52-week low, last trading nearly 7% lower. The S&P ASX 200 in Australia fell nearly 2%, with shares of major miners declining. MSCI's broadest index of Asia-Pacific shares outside Japan fell 1.63%. In the meantime, markets in mainland China, Japan, and South Korea are closed on Monday for holidays. And U.S. stock futures were lower in early morning trade after the Dow Jones Industrial Average turned in 3 straight weeks of losses for the first time since September 2020. Futures on the Dow Jones shed around 440 points. S&P 500 futures and Nasdaq 100 futures also both traded in negative territory. The downward moves in futures came as stocks in Hong Kong saw a big sell-off during the Asia trading session on Monday. The Federal Reserve's highly anticipated September meeting is set to occur this week. Fed Chair Jerome Powell will hold a press conference on Wednesday at the conclusion of the 2-day meeting. Investors are awaiting insights about the Fed's tapering of its easy monetary policy. Powell has said the tapering could occur this year, but investors are waiting for more specifics, particularly after mixed economic data released since Powell's last comments. Investors also await a number of major quarterly earnings reports this week, with Adobe, FedEx, Darden Restaurants, Nike, and Costco posting financial results. On the global oil market, prices fell in early trade today, extending losses from Friday after the U.S. dollar jumped to a 3-week high and the U.S. rig count rose, although nearly a quarter of U.S. Gulf of Mexico output remained offline in the wake of 2 hurricanes. U.S. West Texas Intermediate crude futures fell 30 cents to $71.67 a barrel, after declining by 64 cents on Friday. Brent crude futures fell 27 cents to $75.07 a barrel after losing 33 cents on Friday. Oil fell with a greenback near a 3-week high following a rally on Friday. on better than expected U.S. retail sales data. And when we come back after the break, insurers in South Africa count a cost of the July riots. This and more in a moment. And after some of its worst violence in a decade, insurance say July riots in South Africa cost the country $1.7 billion. That's about 25 billion rand in damages. Some economists say President Ramaphosa must convince investors that South Africa is a safe investment destination that applies the law without fear or favor. Let's have a conversation on this with Matt Kinniger, Associate Practice Lead Sub-Saharan Africa at Docker Frontier in London. Hello, Matt. Good afternoon.
Hello, good afternoon. Thank you for having me on the program today.
Good afternoon. Well, South Africa's second quarter GDP data released earlier this month showed a rebound in economic activity. However, forecasts from Intellidex expect the events to shave a further 0.7% of its GDP. A number of them, many believe that the growth-starved economy can, ill afford it. When do you think full effects of July's unrest be reflected in economic data?
Yeah, certainly. So the sort of big economic data story recently has been the second quarter GDP data that was released earlier this month. It did show healthier than expected activity. So export-oriented industries, including manufacturing, mining, as well as hospitality, all did better than expected. So the economy grew by nearly 20% year on year, which suggests that there is a bit of a recovery from the lockdowns last year taking place. But certainly the data doesn't reflect July's unrest. We have already seen some data points starting to come through. So, for example, retail sales data for July has recently been published, and we saw a very sharp decline in retail sales activity in July. So certainly a reflection of GDP data that is set to come. We've also had a decline in business confidence, so as reflected by business surveys such as the Purchasing Managers Index, which reflects sentiment and activity in the private sector. That fell to the lowest level since August 2020. So certainly businesses as well as retail data is starting to reflect the impact of the disruption caused by July's unrest. But in terms of GDP data, we won't see any data released until December this year. So certainly the full extent of the disruption won't be fully released until later this year. Our view here at Frontier View is that we would expect the economy to contract in terms of quarter-on-quarter growth. So we would expect the economy to contract in Q3, followed by a stabilization in Q4.
Now, the short-term implications of July's unrest are becoming clear, but how do you expect the unrest to affect South Africa's long-term growth prospects?
Certainly. So, we can talk a lot about the short-term implications, but South Africa's growth performance was already weak before COVID-19. So the country entered the pandemic from a position of weakness. The unrest in July has really aggravated the weaknesses that the economy is facing. So South Africa has major structural economic problems with extremely high unemployment, amongst the highest in the world, severe electricity shortages, increasingly fragile public finances. These things won't be directly affected by July's unrest. However, public finances would likely deteriorate faster than we were previously forecasting. So what we are expecting over the next year or so is the government to be forced to raise taxes sooner than it expected, partly to pay for a bigger social support bill. So the government is likely to raise spending on social support, including unemployment benefits, social payments to vulnerable households. This is almost directly in response to July's unrest. So certainly weaker public finances. There's also going to be a negative implication for South Africa's standing globally. So foreign investment in South Africa. We don't think it will. Foreign direct investment is unlikely to collapse, but we would expect foreign direct investment to slow down slow down in 2021 and also grow a lot slower than previously expected in 2022. Overall, what this means is here at Frontier View, we have downgraded our medium-term growth view for South Africa. We would expect the economy to grow by less than 2% over the next couple of years as a result.
And South Africa was already facing record high unemployment before the unrest. So how will the labor market be affected over the coming months?
Yeah, so this is probably one of the most direct implications of the unrest. So South Africa, Q2 unemployment data in South Africa already reflects the impact of weakness in the economy overall. So unemployment rose to a record high of 34% in Q2. We expect when Q3 data is released over the next couple of months, we would expect unemployment to reach another record high. So what this is going to do is make the labor market a lot more fragile. So there will be much higher structural unemployment, mainly because of the destruction of workplaces that was caused by July's unrest. So significant increases in unemployment, much weaker consumer spending as a result. But we also expect the government to temper or sort of slow down the pace at which it wants to cut civil service wages, partly because of the rise in unemployment. So there will be some compensation for the rise in private sector unemployment by relatively strong increases in civil service wages. But overall, we are expecting the labor market to become increasingly fragile over the next few months or so.
All right, thanks, Matt. Matt Kindiger is Associate Practice Lead Sub-Saharan Africa at Frontier View in London. Thank you so much for your time.
Thanks very much.
And the World Health Organization has announced the appointment of former UK Prime Minister as Ambassador for Global Health Financing. Mr. Brown is widely credited with preventing a second Great Depression through his stewardship at the 2009 London G20 summit. He mobilized world leaders to commit an additional $1.1 trillion to restore credit, growth, and jobs to help the world economy through the global financial crisis. More recently, Mr. Brown has tirelessly called on wealthy nations as well as the private sector to ensure the equitable distribution of COVID-19 vaccines, advocating for a concerted global effort rooted in science and sound economics to save lives, end the pandemic, and restore livelihoods the world over. And Zimbabwe has recorded another positive achievement in its COVID-19 vaccination rollout and has been listed among 13 African countries that have reached the World Health Organization target to fully vaccinate more than 10% of its population by the end of September, hitting 2.05 million people of its population with both shots by Saturday. Seychelles leads the African field with 72%, followed by Mauritius on 55% and Morocco on 44%, Tunisia 21%, Comoros 18%, Cape Verde 18%, Eswatini 16%, and Lesotho 15%. Zimbabwe comes in ties with Botswana with over 13% of the total population having been fully vaccinated. South Africa on 12%, Mauritania 12%, and Equatorial Guinea 11% completes the list of African countries that have reached the WHO target. According to the WHO, crippling vaccine supply shortages have slowed down the vaccine rollout in many African countries, but Zimbabwe, like the others in the top ranks, has pushed hard to procure its own vaccines rather than wait for aid programs. And the CEO of South African power utility Eskom, Andre de Ruyter, says talks about reducing the power utilities' 402 billion rand debt to a manageable level are taking too long. The CEO has urged the National Energy Regulator of South Africa to come to the party with electricity tariffs that reflect the cost of producing the power. Eskom Holdings, which produces most of South Africa's power, can't meet its running and debt service costs and is dependent on government handouts to keep operating. And Algeria has allowed Russian grain imports for the first time in more than 5 years. The first shipment of 30,000 tons of wheat is on its way to the North African nation. According to Russian watchdog, the second ship is currently being loaded in the Black Sea port of Taman and will set sail in the near future. The world's largest wheat exporter has been lobbying for access to the Algerian market and is planning to send 2 vessels with a total of 60,000 tons of wheat in September. The shipments mark the first major supply of Russian wheat to Algeria since 2016, excluding a cargo of 28,500 tons shipped in June. And that's it on the program. Thank you for watching. I'm Chimeze Obi Iwagu.